Obviously, we're in a regime now where interest rates are a lot higher as well. Has these higher interest rates impacted private markets in any significant way?
Yes, they have to some extent and to varying degrees. I think the first thing, quite clearly, it's become more attractive to invest
Yeah.
because everything has gone up in credit, and Dan was mentioning corporate credit, so it's meant higher absolute
Yeah.
returns, not in real terms, but absolute returns have gone up and have made it more attractive going forward. Number one. Number two, there are obviously questions being raised about the affordability of some of the capital structure that are out
Yeah.
there, and there is likely to be stress. But from my perspective, it means probably more opportunities for a
Mm.
credit investor. Again, if you look at it looking forward, that means a window of opportunity. The other thing that came out, looking back to our talk earlier about inflation, is that relationship worked quite well on actually looking at the resilience of the valuations of some of these infrastructure equity stories, because you've got a levered, typically a levered equity cash flow on inflation, sorry, and therefore the increase in real rate as well as in nominal rates, has been compensated by that leverage to inflation, or positive correlation to inflation.
I mean, let me just pick up on one thing, being a cautious credit investor. You talked about stress. One of the criticisms on private markets is sometimes it doesn't mark to market in the same way as public markets do. How do you think this impacts your world?
Okay, well, I think we're seeing a wide range of ways to go about valuation of these assets, and I don't really attach much significance to those valuations, because when we go in and let's say we're going in and buying LP stakes, from an existing LP. We look at the NAV, and the valuation of the GP is another data point, but that is not what would decide. It's not the discount to the NAV we're going to get that's going to actually be the decisive factor for us to invest or not. What matters is what returns are we getting, does it make sense in relative value, and that's it. And therefore, we're really, return and IRR driven in absolute, and thinking, okay, does that make sense in this? And then I think the discount we get versus the NAV is telling us more about how they go about valuing their portfolio, but it doesn't drive the decision.